When most people think about credit, they picture a score, a single number that decides whether they get approved, denied, or what interest rate they pay. But today, that number is no longer the full story. Modern credit systems look at more than numbers. They study behavior patterns, the rhythm of your financial activity, and how predictable you are over time. Each line in your report paints part of the picture, and if something looks irregular, the system fills in the blanks with risk. Think of your report like a heartbeat monitor. Every payment, update, and balance change forms a beat. A steady beat translates to stability. Irregular beats translate to uncertainty. Here are 5 everyday habits that quietly change what your file is saying, even when you think you're doing everything right. The first habit is timing swings. Paying on time is great, but if one month you pay on the 1st, the next on the 15th, and another on the 28th, the system sees inconsistency. To you, it's still on time. To the algorithm, it looks unsteady, like pulse jumps on the monitor. Pick one consistent window each month and stay near it. Stability is what the system trusts. The second habit is balance surges. Many people pay their cards to zero, then use them again right after. On paper, that looks like big spikes and drops. The system reads that as volatility, not responsibility. A balance that moves gently up and down reads as steady energy. The goal isn't zero one week and max the next, it's smooth motion. The third habit is account rotation. Opening and closing accounts too often breaks the picture of continuity that the system values. Credit age is history, and history communicates trust. It's like changing jobs every few months. Each move resets your record, even if every job ended well. Keeping older accounts open shows consistency. The fourth habit is mid-cycle reporting gaps. Sometimes a lender skips a reporting month or your card sits unused for a stretch. The system doesn't see nothing happened. It sees something stopped reporting. Silence means uncertainty. Keeping small, regular activity on each open account teaches the system your pattern hasn't changed. It's not about spending, it's about keeping the heartbeat readable. The fifth habit is overcorrection. People often panic when scores dip a few points and start overmanaging their credit-moving balances weekly, paying off tiny amounts every few days, opening new credit to fix things. But too much movement looks like noise. The system reads sudden bursts of activity as instability even when intentions are good. Let your data breathe. Make clean, predictable rhythms, not rapid edits. None of these habits are bad by themselves. They only become problems when the system can't recognize a consistent pattern. That's why two people with the same score can get completely different loan offers. One file shows rhythm, the other looks erratic. The score number hasn't changed, but the interpretation has. Think about a simple example. A borrower named Dana has a 700 series score, but still gets higher interest rates. Her payments are all on time. When she looks deeper, her balances jump because she sometimes pays before the statement closes and other times after. That 2-day shift makes the system think she's inconsistent. Once she schedules payments the same day, each month, her pattern steadies and her offers improve. Same score, clearer interpretation. This is the shift happening across 2026. Credit systems aren't just collecting transactions. They're reading human rhythm through data. They reward people who move in patterns that make sense. Consistency reads safer than perfection. So, what should you actually do? Keep steady timing, gentle balance motion, long relationships, consistent activity, and calm adjustments. Treat your report like it's listening to music. You want a smooth, dependable beat. Credit improvement in this era isn't about fixing something, it's about organizing it. The system doesn't measure worth, it measures stability. Show stability, and you automatically build trust. At We Know Credit Repair, we focus on helping people understand how their structure speaks for them. When the pattern makes sense, the results follow naturally. Consistency builds confidence. Clarity builds trust. Structure wins again.